you for letting me speak to the UPGA Business Summit. Mark and the UPGA members, I really appreciate this. Such an important event, and I'm glad to be able to be part of it. I also want to give a special thanks, of course, to George for making all of this happen. None of us would be here if it wasn't for him. So today, I'm going to talk about the U.S. market, or the markets for U.S. potatoes. And I'm going to start with U.S. potato utilization. Potatoes USA just completed a study where we looked at both sales and utilization in marketing year 2020, which is, of course, starting in July 2019 through June of 20. And the first piece of this was utilization. So what happened to the potatoes that were grown in the United States? So while we did this, we looked at sales to retail, food service, and we factored in exports, imports to get to the total utilization. And as you can see here, that the increase in retail sales was not enough to overcome the decline in food service, as well as a slight decline in exports. And then the imports also further impacted utilization of U.S. potatoes. When we look at what these potatoes went to, we see that frozen continues to be the number one area, or the number one product that U.S. potatoes are used for, followed by fresh at 25%, chips at a very close 23%, and then dehy at 8%. This year, we saw a 2% increase in chip utilization, with 1 percentage point coming from frozen and 1 from fresh. On the sales side, which is in reality much more important, what did happen with sales? So the interesting thing here, of course, is that over the last few years, we've been talking about how the food service sector is becoming a more and more important aspect in the sale of U.S. potatoes in the U.S. Well, this year there was a bit of a correction there, a bit of a change back to retail. So food service went from 58% back down to 53%, while retail went from 42% up to 47%. We look specifically at frozen, we see that same correction, or that same change, where food service declined from 85 to 82, and retail went up from 15 to 18. On the fresh side, it's very interesting because we were in a situation where it was basically 50-50 between food service and retail, and now we're back to a situation where 41% food service and 59% retail. So a bigger swing back to retail for fresh. If we drill down into the retail sales, we see that all products except for ready-to-eat meals sold at the deli, or ready-to-eat products sold at delis, went up. You can see that we had very strong growth for dehy and frozen, as well as canned. But even chips at 5.5% growth, since it's the largest category at retail in terms of volume, that had a significant impact. And so total sales were up almost 9% for the market. Of course, food service was the opposite. Here we see a decline in sales of all products, with fresh having the highest decline at 19.3%. This decline really did have a big impact on our industry. We have all felt those impacts as that product didn't go into food service and has moved back into retail. All right, so I'm going to take a little change here because that was the utilization for last marketing year. Now I want to look at the specific market, starting with a quick look at the international market, because that is very important for many of our products, particularly for frozen. So if we look at what happened in the July-June marketing year, July 2019 through June 20, we see that there were some declines. The interesting thing, of course, is that all of these declines occurred in the last 4 months. We were having record exports up through February. And then because of the impacts of the pandemic, we saw these declines, but still only 4% overall, which is significant, but not too dramatic. If we take a look at this over the last 5 marketing years, we see that we're actually still at 0% change in essence. So we're basically back where we were in marketing year 16, which was the year right after the impacts of the West Coast port shutdown. So while we lost a bit, we're still not that far off of where we've been over the last 5 years. Okay, so what's happening this marketing year? Obviously, so far, all of this marketing year has been impacted by the COVID and by the restrictions from the pandemic. So we're off 15% for the July through October period. But if you drill down and look at month by month, you see that a lot of that loss was over the summer, and that here in September and now in October, we're not back to where we were, but we're much closer. So we're getting much better. The rate of decline is definitely dropping. If we look at the specific products, we see that frozen is the one that's had the biggest impact, off 21%, because that's so focused on food service. But again, the rate of decline is improving as many of our international markets start to recover. One of the biggest concerns I have for the coming year, or the biggest factors impacting the international market, is the unit value, or the price of product being exported from our competitors and from the US. And if you look in particular at the number for the EU, you can see that those are over $200 less per metric ton than the US product. That is a significant difference. It makes it that much more difficult for us to compete against them in our international market. And then if you look at the graph on the side here with the settling prices, these are the futures prices in Europe, because they do have a futures market for potatoes. If you look at that solid blue line there, that's 2021, and it's the lowest of all. So we're not seeing a correction in these low prices in Europe, certainly this year. And that is something that has me very concerned as we go into the year and the competition this is going to create. Another factor that concerns me in terms of our exports are the trade agreements, and are the fact that our competitors have continued to move forward with trade agreements while we have not made nearly as much progress in this area. Most recently, there was this new China and Asia Pacific trade agreement. It's not a full free trade agreement, but it is a cooperation agreement, and it does start to lower tariffs. Production of frozen fries in China continues to expand. Just this week, we saw that McCain's is investing in a second plant there. So that is going to become a bigger and bigger factor as well in terms of China competing in some of these markets, along with the EU and, of course, Canada. But there's still a very positive aspect to the international marketplace. It is a $73+ billion market just for processed products around the world. This is a huge opportunity. This opportunity is doing nothing but growing. So we really do have opportunities. We just need to be able to access them and take advantage of them. One of the other factors, though, that has me a little concerned for this coming year, and this goes back to those unit values, of course, as well, is supply. The EU, despite the pandemic, did still increase potato production. Part of that was weather. The acreage was about the same as the previous year, but they had much better weather this year. So they ended up a 4.5% increase in production, whereas both the US and Canada declined around 2% in both of those countries. So was there an overreaction in North America? Are we going to have enough supply? Obviously, that depends on recovery. That depends on demand both here and internationally, but it is an area that concerns me. So I kind of hate to do this, but I'm going to go out a little bit on a limb. These aren't too dramatic of prognostications about what's going to happen this coming year, but these are just some thoughts I have on the international marketplace and what could be happening. Certainly the pandemic restrictions are going to stay around for a while, though you do see in Asia significant improvement and relaxation. But the one area that's probably going to be the last to change is international travel. That impacts the tourism in many of these markets. And that is really important in a lot of these markets. Thailand, Vietnam, other countries in Southeast Asia, really rely on tourism, and a lot of the food service that we sell to rely on those tourists. So that demand aspect will take longer to recover. As I just talked about, the EU and increasingly Chinese competition is going to be fierce. We've got to recognize that we are competing with these countries, that we have got to be able to meet them in a lot of different ways. But I do think by this time next year, the demand will be completely where it was, or even more so than at the pre-pandemic levels. So I see really very much a recovery in demand. The question in my mind is the U.S. industry going to recommit to fully taking advantage of this, and are we going to have the supplies needed? Okay, so let's change gears again here and look at the domestic market. Obviously, there's been a lot that's happened since that last marketing year that ended in June that I was just talking about. So let's drill down into this period. First and foremost, and this is what I was talking about, food spending has shifted again. So food at home was declining, or more importantly, food away from home was continuing to increase since 2014, and it surpassed at-home eating. Well, just like everything else, consumption of food has now returned to the home. How long this is going to last is hard to say. Certainly people want to get back to restaurants, etc., but I don't think it's going to be an automatic shift either. So this is an important aspect for us to remember. So, impacts on the food service industry from the pandemic have just been incredible. Now, of course, 215 billion in sales lost from March through October is not just food. There's a lot that goes into food service sales, restaurant sales, beyond just the food. But that is a significant loss in sales to that sector. If we look at the other side, at grocery sales, they increased 100 million from March through November. So if you remember, I was talking about billions, now I'm talking about millions here. So it's not nearly the same level of significance. On the other hand, back to food service not being all food, there's so many other costs there. That's where you see that, food service runs about 40% is food costs. So if you take only 40% of that other number, they start to be a little bit closer to one another. So how have potatoes fared in all this? Well, certainly at retail, we've fared extremely well. Produce sales spiked in the spring, and potatoes were right there the leader. We are the pandemic powerhouse. And we've seen the largest increases, the largest volume of sales as a result of the impacts of the pandemic. This is, it's got to look for silver linings, and this is certainly one of them. Retail potato sales from March through the end of November. You can see excellent growth everywhere. And again, we all know that things spiked at the beginning back in the spring, but they've stayed well above 2019 levels since then. The only exception, and I mentioned this before, are the deli prepared sides. And a lot of that has to do with many of the delis have had to close for food safety or health safety reasons. But 19% growth, certainly led by fresh potatoes at 20%, frozen at 30%. A lot of good growth that is continuing as we move along here, not just back in the spring. Drilling down into what specifically has been happening with fresh, we see that russet sales have done very, very well. 24% in dollars, 18% in pounds. So significant increase in russet sales, also a significant increase in yellow. Pretty much everywhere across the board, we've seen nice increases in the sales of fresh retail potatoes, and a total of 18%, as we talked about before. When we now look at pack size, those have all done well also. So we see that all pack sizes have grown. There was a nice movement in 10 pounds. We know that initially a lot of product was moving in these larger bags. I'm sorry to say, Ross, that the 15 and 20 pound bags didn't quite take over like you'd hope, but excellent growth with all pack sizes, with, of course, the 5-pound bag still being the top way that potatoes are sold. So, on the restaurant side, on the food service side, we've had 110,000 restaurants close in the U.S., or 17% of the national total. That's almost a quarter of all restaurants. And certainly this winter, we're going to see a lot more. I would not be surprised if this gets closer to 200,000 by the time everything is said and done, just as the winter impacts and the continuing problems. There's a lot of light at the end of the tunnel, but there are still restaurants that are going to close. So from the potatoes perspective, what's happened as a result of this to frozen potato sales? And this is frozen potato sales to the food service industry as calculated by Technomics. And you can see that we have lost 1.1 billion pounds in the period from January through to the end of September, or the first 3 quarters of the calendar year. But the thing that's really important here is you see the big spike of 33% in Q2, but then things have improved significantly over the summer in Q3. So we are in a better position and things are recovering. And that's an important factor, is that frozen fries are starting to get much better traction than that initial period. And that's because there really have been some bright spots in this overall situation. Food service as a whole has really suffered, but concepts like Wingstop, Domino's, Papa John's, so the wings, the pizza, they have recorded double-digit growth throughout this period because they were so well equipped for takeout and delivery options. And now we're starting to see the burger chain really recover quickly as well. McDonald's actually posted year-over-year growth in Q3. So they are seeing people return. They have managed to adjust, and this is helping with fries. And this is why potato sales are not down nearly as much as overall food service sales have declined. And then there is some really strong pent-up demand out there. This is a picture of the line to get into the new In-N-Out burger that just opened up here in Colorado. People waited in line over 12 hours during the middle of the night in Colorado. It's just insane. And that's partly for In-N-Out, but it just shows that people want to get out of the house, they want to get food service, and the potatoes and fries are well positioned in this pent-up demand. So, Americans still love potatoes. And these are the truths that we hold to be very, very important to us. We're still America's favorite vegetable. We're on 84% of all food service menus, and we're the #1 vegetable sold at retail in the U.S. So we're still in an excellent situation when it comes to potato love in the U.S. The demand does remain strong, but it's shifted. It's shifted from food service to at home to retail. How long that shift takes or stays, when it starts to go back, is hard to say, but it will, but I don't think it's going to just automatically change. I think we're going to see remnants of this shift stay in place for quite some time. So all in all, while it's been a tumultuous year, we're still in a very good position, and we really are recovering both in our sales internationally as well as domestically, and we're doing a good job of adjusting, but we need to continue to adjust, and we need to continue to adapt to this new market situation. That's all I have for today. Thanks again to UPGA for inviting me, and to Mark and George for making this happen.